Hey everybody, welcome back to the Mark Loeffler Experience. Guys, today we are talking about wealth. Wealth is a lifestyle, guys. It's not this isn't get rich quick. I mean, guys, go back to the video with Jeff and Quentin, and these are wealthy guys. They are wealthy, wealthy guys. And I mean, they make good returns now, yet they've spent a lot of time learning to get there. So let's go through just some basic wealth stuff. Just basic. What are we going to do at the beginning to become wealthy? So number one, we're going to figure out where we are. We're going to sit down and we're going to figure out our net worth. I mean, I just did this recently with, a couple months ago before COVID-19 with a group of people, and we did a little bit of a wealth mastermind. And I mean, there's people in the room that were negative 50,000. There's people in there who had $1 million net worth. I mean, here's the thing. Does any of that matter? No. Everybody needs to start somewhere. So if you're starting from that negative net worth, it means that you have more debt than you have assets. So number one thing is figure out, okay, do I have a spending problem? Am I spending more than I'm making? Because if you're spending more than you're making, getting wealthy is pretty hard. Figure out where you're at today. Sit down, net worth calculator. So what are your assets? What are your liabilities? And I mean, I'm not Dave Ramsey. You can go on Dave Ramsey and check out his budgeting and all that type of stuff. Guys, I don't really do that. I kind of put money into an account every month and my bills come out of that. And I have this other account that I basically get paid into. And yeah, I always have extra money to invest. That's just kind of how I've always done it. So I have a rough budget. When that account's out of money, I mean, that's it. It's like trying to plan a road trip and say, I want to go to Disney World and I don't know where I am right now. It's not going to work. I'm not going to get to Disney World if I don't know where I'm starting from. Because if I'm starting from Toronto and I'm planning Disney World and it's different than if I'm in Nova Scotia or California or Tampa Bay, right? It's all different. So if you don't know where you're starting from, it's really hard to get to where you're going. All right, number two is education. Educate yourself. What are you doing? Are you reading books? Are you watching YouTube channels? Are you watching, I don't know, you can watch CNN and those types of things. I mean, yeah, there are some good information on there, yet, I mean, basically go learn about money. That's the number one thing is go learn how money works. All right. This isn't all that complicated. And here's the thing, guys, you don't even have to become a genius at it. Like you can go read, what's Tony Robbins, his, I don't remember his book name. You know what, after this, I'm going to go look it up. I'm going to put in the description below and I'll write a little thing on there and I'll send it to you guys. Okay. So it'll be right here. And Tony Robbins' books, anyways, put it on there. I forget what it is right now, but I'll put a link in the description below. And from there, it's simple. He lays it out pretty simply. Like you don't have to become a financial analyst or anything like that to be wealthy. Really, the trick is time in the market. Not timing the market, it's time in the market. So you want to be wealthy, it's, okay, I have this much to invest right now. Great. It's doing it today. And I always tell people, you don't need a lot of money to start with. If you want to start investing in the stock market, great. Go invest in the stock market. If you don't want to learn all that much, you don't want to do options trading, you don't want to like buy and sell some stocks or whatever, you don't want to be that involved, right? It's like, great, no problem. It's pretty easy. Go take the money, put it into a low cost index fund, put in the S&P 500, TSX index fund. You're going to get some dividends, and reinvest those. And the real secret to it, anyways, if you're going to do options trading, if you're going to do buy and hold, it's adding money over time. That's the biggest thing. So when people talk to me about options trading and stuff like that, I go, guys, start with $5,000, $10,000, really a number that you can go in and learn and figure it out. And if you lose it, it's not going to end your world. And over time, if you can add $500 a month, perfect. If you can add $1,000 a month, that's what you should be doing. And so you have time in the market rather than timing the market, because timing the market is for fools. If somebody tells you they know exactly what's going to happen and this is going to happen, this even into like the COVID-19 world, we don't know. Do I know? I mean, I'm guessing that the market's going to have another downturn in the next little bit. I mean, just based on what oil's doing, what the job numbers are going to look like coming back. Did we overshoot and come up too much? I don't know, guys. Yet, I still own stock. Am I sitting mostly in cash? Yeah, I am. Yet, I still own a fair amount of stock that I'm holding, and you know what? I probably pick up some money on it. I might flip it out. I don't know, guys. Again, I've talked not endlessly, but a lot now about like options trading. You can go back to Jeff. We talked about it. Quentin's doing that too. I mean, a lot of people I hang out with are doing options trading because you can get great returns on it, and that brings it back to it, right? It's time in market, and why is that? Because if you've ever heard of the rule of 72, the rule of 72 is basically if you're making an investment and getting 4% a year return, then it's going to take you 18 years to double your money. If you have an investment and you get 24% a year, it takes you 3 years to double your money. Pretty simple, right? So when we talk about real estate and you're getting a 20-25% return on your initial investment, guys, like these things are no brainer, and it goes up over time. It's easy to build your net worth and your wealth. That's why that's why most wealthy people are in real estate in some aspect or another. You can buy a piece of real estate, rent it, do break-even cash flow on it, and still the returns are 20% a year at first year, and then they go up over time. And you don't even have to manage it. You can have a property manager. It takes very little time and effort to do it. Number 4 is, who you hang out with does matter. It really does. Like, I'm introducing you to some of the guys I hang out with all the time, Jeff, Quentin. I'm going to have other people on the show, like Mandy, Branham will come up. And guys, I hang out with these people, and they do amazing things. Like, some of them do stuff that I'm like, wow. I mean, when I grow up, I want to be like you. And I know sometimes they say that about me, and yet, that's just what it becomes. So it's really about, okay, I'm going to do this. I'm going to learn it. So take the time. If it's real estate investing, you want to be a real estate investor, great. Take the time, study your market, read. Guys, take action though, because you don't get into analysis paralysis. Basically is what I'm saying, is you can get into analysis paralysis. Like if you want to get into the equity markets right now, I mean, you can go buy Enbridge, right, at like $40. I think it's an 8% dividend right now. Like 8%, like basically all you do is put that on a dividend reinvestment plan, a drip. You're getting 8%, so you're buying more and more stock as you go on. And again, it'll revert to the mean, which means basically it's going to revert back to paying a 6%, 5% dividend, which the price goes up $10, $12. So yet you can build over time where you don't actually have to put more money in. Yet if you're doing that, say you invested $10,000 in Enbridge today, and every month you put in an extra $500. And you built up slowly over time, plus anytime you got a dividend on that, so dividend of $10,000, 8% dividend would be $800 a year, you bought more stock. This is how you quickly build and build and build. Because now every dividend rolls around, maybe you have $12,000 in stock because you've put your dividends back in, you've been adding money. Now you're doubling. You're getting there. You get there faster. So don't just sit and make, you see all these things like, oh, I invested $10,000 and these are examples, guys. It's always in books and that. I invested $10,000 and I did 8% return. So I'm doubling my money. What's that? Every 9 years. Great. The key though is to add a little bit. Guys, if it's $5,000 now, if it's $1,000 now, and you're adding $50 a month, none of these things matter. It's more, obviously they do over time, yet it's more about being in the market and time in the market rather than timing the market. Timing the market's a fool's game. And a lot of the guys I hang out with try to time the market, and I am more of a laid back, I'll hold a great stock. Again, like I talked about last Thursday, I bought some Royal Bank stock, bought Suncor. These are great stocks making great dividends. I just got paid a dividend on Royal Bank last Thursday. It's 5-something% dividend. Where is that going? They haven't reduced their dividend or canceled their dividend in I don't know how long. In 2008, they never canceled. Any Canadian bank never canceled or lowered their dividend. So, you're getting 5-6% on a Canadian bank. Guys, this is great. So, and why do I think now is the time to act? We're going to get through this. This is going to all come back. Is it going to take a while? Yeah. It's going to take a while. Are we going to have fits and starts? Yeah, I think so. Yet, if you put $5,000 in today into the market, even to an index fund, and you put $500 a month, $100 a month, whatever that is, guys, it doesn't matter. The numbers aren't important. The important thing is getting it started and putting that in and putting that together so you can start compounding that growth. Because maybe the stock market goes down 10%. So, okay, I had $5,000 in, I lost $500. Well, it's only lost if you sell, first off. So maybe you can afford to put an extra $100 in, right? $200 in. Now you're buying 10% lower. So, and then when that goes back up, well, you've made that 10% on that, you break even on the other one. And yet it's just a cycle of growing that money over time. And at some point you become the expert. If you're a real estate investor, other people will invest with you. It happens in the stock market too. That's why we have financial analysts, right? Because they're so good at investing their own money that we all want to invest with them. Makes you think. Anyways, guys, these are my top 4 tips on becoming wealthy. So number 1, figure out where you are because you can't know where you're going. Number 2 is education. Number 3 is time in the market, not timing the market. Again, best time to buy real estate was 50 years ago. Second best time is today. And number 4, take action, guys. Thanks everybody for watching. Guys, like and subscribe. I appreciate everybody who has liked and subscribed. We're over 200 subscribers now. Goal is to get to 1,000, and it really does help the YouTube algorithm to smash the like button and comment down below. If you guys like this video, let me know. If you didn't like it, let me know. Any other tips you guys want to see videos in the future, happy to do it. Comment down below. Thanks, guys.